Hello and welcome to the Markets in Free with me, John, Senior Market Analyst here at Anzo Capital. I'm here to give you the latest information in all things FX markets. And today, for the first chart check section of the live stream, I'm going to take you through the US dollar versus the Japanese yen. We have now broken through the 163 barrier, which was the 40-year high, and price looks like it's continuing to move higher, potentially up into the 164 area. So where's this going to end? Where is dollar yen going to head to next? We have had some reports from the finance minister in Japan, Katayama, talking about they are willing to intervene in the markets if price gets too high. So what is going on? Why are we not seeing a reaction just yet? I think it needs to just blow out these highs, blow out these 163 levels and see how it reacts. We obviously got a lot of geopolitical tension in the Middle East as well. We've seen US bond yields rise, and we have a very strong correlation between the US bond yields and US dollar yen. So this is a daily chart of dollar yen. If I just add compare on here and put US 10-year yields on the chart on a new price scale, you'll see that they have a very strong correlation, even through this area here where we did see not necessarily intervention, but we saw the stock market in South Korea fall, and we saw a move from 160 down to 155 on the dollar yen price. But if you look at US bond yields at the time, that was still continuing to rise, and after that, dollar yen followed on. We had a period of downside on the bond yields, but that only formed a short sort of consolidative pattern on dollar yen, and the market continues to rise. So why is dollar yen still doing this? Well, actually, despite the fact that the Bank of Japan are raising interest rates, and despite the fact that their interest rate has now, gone from 0% all the way up to 1%, the carry trade here is still pretty strong. US interest rates still around that 4.5%, 4.25% level. So the carry, or the difference between the interest rate spreads, is still good. And that's where a lot of hedge funds, large speculators make a lot of money in the markets, by holding the currency that has the higher interest rate versus the currency that has a lower interest rate, because you basically can borrow tons of Japanese yen at a low interest rate and stuff it into a high interest rate and collect that extra interest. So that's why dollar yen usually trends pretty well, especially in those periods where you had that low interest rate. And the market continues to drive higher. We recently formed this kind of triangle pattern, consolidative pattern at the 162 handle, but now price has broken out of that, and since then we've continued to drive higher. So what's going to change here? What do we need to see in order to see some kind of breakout? Well, first of all, I think right now we need some kind of geopolitical sort of extension of what's going on. Now, higher oil prices is not going to be good for Japan either, because they import a lot of oil. They're a big oil importing nation. So that's going to have a large impact on consumers in Japan as well. We've obviously got the story as well of wages increasing in Japan too. So inflation is going up in Japan. So a lot of things are pointing towards a Bank of Japan that are hiking interest rates, but that still hasn't led to that yen strength that you would normally or typically expect when it comes to a central bank hiking rates. So the market's continuing to drive here. We can look at this from a potential technical perspective as well. I know a lot of traders out there use Fibonacci levels and things like that, and this is maybe a good opportunity for us to explore that a little bit, because of the fact that we have this really strong upward trend on the weekly chart from the lows back on the 21st of April 2025. The weekly chart has been consecutively making higher highs and higher lows, with the recent sort of low of that leg forming on the 4th of May around about that 155 handle. So what I'm going to do is I'm going to grab something called the Fibonacci retracement tool, and I am going to go from the swing highs of the move. Okay, actually, sorry, I'm going to go from the swing low. I usually draw my fibs a little bit backwards. So swing low to the swing high of the move. Okay, and what I'm trying to do is almost plot potential extension levels, and that can often lead to potential reversal points. Now, when you're looking at the Fibonacci retracement tool, there are a few key levels. Obviously, you've got the 61.8, 50%, and the 0.382. Those are key levels to look for when you're looking at trading in markets. Now, when you're looking at fib levels, it goes without saying that you still need to apply logic, right? You still need to apply sort of, other key things to look out for. So maybe like volume profile, market profile, looking at where those key levels come in at those key points. Now, what we can see is the market is just extending higher. We did touch the extension level of 127.2, which is a first level of extension, which came in at 162.71. But price has now blown through that. So the next level of interest could be the 1.61.8 handle, which is at 165.60, which seems like a far off sort of place at the moment, considering that is still another like 200 pips away in dollar yen prices. But that could be a turning point. The market could overextend into that level, and that could be the turning point for price. I am very wary of trying to catch the trend here. I'm very much a trend-based trader. But even I am worried about trying to get onto this move here, because prices this high usually does lead to intervention, and I don't want to be caught on the wrong side of that. Now, if I go to the monthly chart here on dollar yen, we don't really have too much to work with. We've got a 164 handle, which was this high all the way back in December of 1986, right? So that could be the level that we look at, which is actually saying the high of that candle is 164.50 bang on. So we can put this level in at 164.50 and maybe hope or have a look at, if price gets to 164.50, does it react? If it breaks above 164.50, then that 165 handle that we just talked about with the 1618 extension could be on for a move higher. A break above that, and then we're looking at some serious levels. We're looking at sort of 180s, 200s, which we haven't seen since 1978. I wasn't even born then. So those levels are, I wasn't even born in 86. So those levels here are levels that I have never witnessed before on the chart. So that is, a potential for the market to continue and move to those types of levels. And if it does, that's going to be some key areas to target. Now, if you do think intervention is going to come in like I do, then you could potentially prepare for that by kind of, looking at reversals around those points, maybe even like sell limit orders around these kinds of levels. That's what I kind of look for. I'd prefer for price to go and hit the level and then try and look for a sell stop. So that basically means that if price comes into the level, it's like what I did back here for when we hit this 162.60 handle. I placed a sell stop order below the daily candle low, because if price comes in with it, then fantastic, I get a good trade, right? But if it just continues to go on its merry way, then likelihood is I'm not going to get triggered. So, I did place a sell stop order below this daily candlestick low on the 21st of July, which was at 162.30 with a stop loss above the high. Hasn't triggered. Market's moved on. And to try and catch this move, all I'm doing is setting end of day orders below the previous day low, because if we do see an intervention, it's not like 40, 50 pips. It's 300, 500 pips moves. So all I'm doing right now is I don't want to be on the buy side of this, just because I think it's going too far. the market is moving too much. Let's see if there's any kind of confluence that we can add into this. So the first thing I'm going to look at is the seasonal pattern, right? I'm going to look at the seasonal pattern for dollar yen. So let's take a look at that together. So let me go to my markets made clear dashboard here. We're going to have a look at dollar yen. I'm just going to type in dollar yen and see what we get, see if we get any kind of, let's do yen futures, Japanese yen futures. Let's do Japanese yen futures and have a look at that first. So we've got a 20-year seasonal pattern that can form around this time of year. So it looks like between the 21st of July and the 5th of August, there is usually a low that forms in Japanese yen futures, which means that that could be stronger. It has a 75% win rate, 15 losses, 15 wins, sorry, 5 losses over 20 years. The only problem we've got with that is that current price correlated with that is only 42%. All years is even worse. It's minus 44%. So current price is nowhere near reflecting that, right? So I'm going to have a little look at TruePath. So TruePath is a really cool feature of the Markets Made Clear platform where it picks out years that are following similar patterns to the current year, and then we'll merge them all together to form like a custom sort of seasonal pattern. Now, what I can see from this is, again, we can typically see some kind of low coming in around this time of year, but really that low starts around August 10th. So not the necessarily the strongest seasonal pattern. This custom one, that does include, how many years that include? 1, 2, 3, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So it does include 17 years of data. So quite a large, field of data. That actually does show a bottom forming around August 10th and has a 93% correlation with current price. So that's maybe something to look for. Maybe that means that maybe going into the end of July, start of August, we're not going to see that bottom just yet, which would coincide with our analysis on the weekly chart, suggesting that we could see 164.50, perhaps even 165.60, if it does continue to drive out higher over the next couple of weeks. So that does make a little bit more sense because we could likely see a bit more of a move there. If we go on to the commitment of trader reports, then what are we seeing? Well, the Japanese yen has started to come into a very strong level, but we've not really seen any super aggression at this point from the hedge funds. There's no like ridiculously increase in that open interest, right? Let's see if the platform loads for me here. I'm just gonna have a look at the open interest first on the Japanese yen. So yeah, open interest has actually kind of declined, right? So that is not necessarily what I want to see at this time. I want to see, basically the open interest be super high on a currency pair like this, on a currency. Now, when I go to the extremes page on Markets Made Clear, there is the non-reportables bias, right? So the non-reportable bias refers to being net long or net short. If the non-report bias is long, they have a larger long position than short, and vice versa. So basically, this is flashing to us short. So what that means is that they are holding quite a large net short position, the non-reportables. Now, they are usually wrong in the market, okay? They follow typically what hedge funds do and things like that, but they tend to be aggressive towards the end. So let's go and dive into the report a little bit more just to see if it can give us any kind of sign of what's going on. So I'm going to add some charts onto this here. So what you can see here is the weekly chart of Japanese yen futures, again, which you can see is breaking lower. And then below it, we have the commercial positions and the non-commercial positions. So let's have a look at the net commercial positions and the net non-commercial positions. Now, they still haven't reached an extreme, right? The last time we saw a strong extreme was in July of 2024. And you can see here that extreme, so net contracts at the time On the non-commercial side, so the large speculator side, we're at minus 184,223 contracts, right? Right now, we're at minus 122,663 contracts. Now, they are at an extreme, considering when you look at history, they've not been in this area, since that July period, but it's still above that extreme. So is this the right moment that it's going to turn? Is it going to turn right now? Perhaps not. Okay, because in July we saw a big move in dollar yen of 2024, of a move to the downside, right, which is opposite to this yen futures chart. Again, when I look at the commercials and we look at that aggression that came in, they were at plus nearly 200,000 contracts. Now we're at 120,000 contracts. So we're not really seeing that. Now, what I can turn it to, I can look at the non-reportable positions too, and just see where they are, in the market. And we can have a little look at the short contracts, and we can have a little look at the long contracts too. So looking at the short contracts, they got very, very aggressive, but that was back on the 15th of June, and that was where we had that sort of strong bearish weekly candlestick to the downside. So they got quite aggressive there. When we look at longs, same thing. So nothing really here to report from a non-reportables positions, really. We're looking at sort of basically looking at the non-commercials being our key driving factor, and I think they need to be a little bit lower. They need to be a bit more of an extreme before we look at that. So Japanese yen, dollar yen, where's it heading to? Where are we going with it? I still feel like maybe some upside is moving higher. Me personally, I am going to try and look at potentially shorting end of day lows on a sell stop orders, just because I want to see if I can try and catch this move. Will price continue to move up? Perhaps. And if price does trigger me on the downside, then I'm going to watch it very, very closely, because if it looks like we're going to perform another bullish move, I'll get out. Okay. But that's just me personally. This is not any trading advice or anything like that. Please do your own research and due diligence, and make sure you risk appropriately. But that's what I'm going to be personally looking for, because if we do see intervention at these kind of levels, it could remind me of what we saw back in that July of 2024, where we saw prices move from that 162 handle all the way down to 140. But again, what happened? We're not seeing speculators get that short yet on yen futures. So they need to reach a bigger extreme for me. Seasonally as well, we can typically see a move around about August 10th. So maybe we've just got another couple of weeks before we see this kind of move come into play. So let's move on to the next part of our stream, which is the big story. So at the big story, I kind of bring you some kind of Forex news that is impacting a particular market or global markets, right? Now, we had some data overnight, which is pretty positive for the Australian dollar. So we've seen the RBA recently, hiking interest rates, really worried about inflation, X, Y, and Z. And recently, the talk has been a little bit more dovish. However, Australian dollar has been one of the strongest currencies, especially against the US dollar, which has been strong too. So what is going on there? Well, we've had data overnight, employment change. That was actually better than expected. So the previous was 43.9. That was actually revised lower from revised higher from 40.3. The forecasts were loads lower, right? So it's 15,000 jobs. So they were expecting a bad jobs number to come out of Australia because inflation has been higher. That wasn't the case. The employment change came in at 76.3 thousand. So a huge jump to the upside in jobs being created. The unemployment rate remained unchanged at 4.4%. So we didn't see any decreases there yet, but that shocking number of employment change could change a lot of things for the Australian dollar. So when we take a look at the Aussie dollar across the board, it has been a stronger currency. If we look at Aussie against the US dollar on this daily chart, when we had that news, it popped higher, right? Because it was good data. So that to me means that maybe the Australian dollar is going to get a bit stronger. And can we go and pair it with weaker currencies? You know, very much like when we take a look at Aussie Kiwi, that trend has been up for a long time. We recently came into support. If we look at the news, it got a really good boost and has continued higher. Now, you know, Aussie Kiwi's been a little bit weaker, but more on the risk sentiment side this week. But we could look at other currencies, right? If we look at the Oz complex here, it's up against the Swiss franc at the moment, which is breaking out to the upside. We are a little bit stronger than the Canadian dollar as well. So we know that CAD, if we take a look at the Equipment Trader reports quickly again, we know that on the Canadian dollar side of things, commercials are buying that pretty aggressively and hedge funds are aggressively short. So that means we could probably see a flip and some CAD strength. So maybe stay away from Aussie CAD, but look at Aussie Yen. Aussie Yen is starting to rally back to the upside, break through key levels, and is heading back towards 114.50. One chart that I probably like out of the most is Euro Oz. Okay, we do have the ECB meeting coming up today, but there is poor growth in Europe, and they are battling whether to you know, keep rates higher because of the inflation and the oil shock that's going on in the markets, or try and protect growth by bringing rates in a little bit lower. So they haven't really made a decision yet, and we've got the ECB decision today. So if we do see a bit more of a dovish ECB, then Euro Aussie could really benefit from that, and we could see some really strong downside moves. And at the moment, we've broken through on this daily chart through multiple lows, even the lows at 163.20, and have broken through these trend line support where we formed from the anchor point was the 13th of May, formed on the lows of the 3rd of June. So we've got that anchor formation point coming through, and we've broken down through that too. So when I go to the 4-hour chart, there's some key levels that we can look at. Again, just kind of using volume profile, market profile to have a look at where these things come in. We've got value area low currently at 163.33, which price has slightly rejected. But I like the idea of it coming up into the point of control of this level here and then continue down. So around about this 163.80. So if we see a pop up in price today because of the ECB data, then we could see maybe a move up into 163.80 before seeing a continuation to the downside. Alternatively, I'm going to be keeping an eye on these 4-hour highs. If we reject, fail to break above, close back below, that could also mean that we're going to see some further downside too. If we bring in the 50 moving average as well, price is trading below that as well. So typical rule of thumb for me, if we're trading below the 50 moving average, a bit more on the bearish side. If it's above, I'm a bit more on the bullish side, okay? So Euro Oz could be one to watch for the big story this week. Now I'm going to move on to the skill of the day, and the skill of the day is going to be really simple. We're going to be talking about head and shoulders patterns, and the reason why is because gold has created one. Gold has created a head and shoulders pattern on the 30-minute time frame. So we're going to discuss a little bit about that, how to potentially trade them. So when we look at gold, this is the 30-minute chart on gold. We have been moving higher recently. So if we look at the 4-hour chart here, price has been making a break to the upside. We broke through this kind of trend line resistance here. Market has continued high. We broke back above the 4-hour 50 moving average, and we came all the way up to test the 4-hour 200 moving average. And we've started to see a little bit of downside here and price making moves lower. Now, interestingly about gold, it's moving higher despite bond yields moving higher, which I think is a bit weird. So maybe because yields are starting to move higher still, we're starting to see this bit of a breakdown here. Now, if we look at the 30-minute chart, we can see that the market is making what's known as a head and shoulders pattern. So what is a head and shoulders pattern? It basically is a pattern, a candlestick pattern that looks like head and shoulders, right? If I was to draw sort of like a character here, right, you have the left shoulder, you have the head, and you have the right shoulder, right? How that looks on a chart pattern is like this. We have a rally in line with trend, and then another rally in line with trend. So it looks like a normal sort of higher high, higher low pattern, right? Now we know it's a potential head and shoulders pattern because price then drops considerably, usually back towards the left shoulder area, and then we form a lower high. Okay, so that lower high becomes the right shoulder of the pattern. Now, this pattern only completes if we break through what's known as the neckline of the pattern. The neckline is formed from the lows of the left shoulder and the right shoulder. And we can see here, we have broken down through that pattern there. Market has broken through those neckline lows and is sustaining the move down towards that $4,085 area. So how do you trade it, right? There are two ways you can trade a head and shoulders pattern. First of all, you can trade the breakout, right? So this candlestick here, where we broke and closed below the neckline, that could have been your first entry, stop loss above the high, looking to try and trade the momentum down. The second entry is usually found on a pullback, right? So a pullback into the neckline and a continuation of that. Now we can add a couple of layers to it. So what I typically like to do is add in things like market profile. So you can see I've got a market profile on the screen because I was monitoring this breakout of this low volume node, and the market is continuing down. But if I just drag this over to the current day and what's going on in the current day, we can see that there was an accumulation being built at that right shoulder before the breakout. So adding an element of a layer to this, I can say, well, if price comes up to the neckline and doesn't quite reject it, I don't think the move's over, because we do have a point of control slightly above the neckline. So I think that could be a good area to look for a short on this particular head and shoulders pattern on on gold. Now, there are other ways you can look at it as well. You can look at Fibonacci retracements. So if you were to draw a Fibonacci from the swing high down to the swing low, you could look for a pullback into those type of levels too. But this is my preferred method. I like to see if price has accumulated in that area. You know, buyers and sellers have been agreeing with price, and now sellers have won. It just so happens that we have a head and shoulders pattern here as well. And that can mean, you know, we are breaking down the trend and sentiment is potentially changing. So if price comes back into that level, I like the idea of being short. Now, where can we target? So we've got, you know, you can either look at targets of a measured move, which basically means you measure down from the head of the pattern down to the neckline, right? And what you can do is you can clone that move up and put it where the breakout was. So for this current move, right, there is a potential for it to come down to $4,054 if you're looking at it from a measured move point. Now, I like to be a little bit more practical again with this and look at areas of support and resistance. We can see that price formed resistance just a little bit higher. It's kind of where price is heading into now, this $4,085 area. If price comes back down into there, that can also be a bit of a support point, right? So one thing I'm really looking for now is if we start getting a pullback here, great. I'm going to be looking for price to come into the point of control and the neckline of the head and shoulders pattern. If we do and we reject, I'm going to look to get short down towards 4,085. So a very clear plan that we can have in place there. So keep an eye on this one today. Gold's setting up for potentially a nice little move here. So yeah, just keep an eye out for it. We can basically look for opportunities. If it does continue lower, you have the measured move that you can look at as well. You know, some people like to take the measured move from the actual high of the right shoulder, which does bring price down into the same level that we're looking at. I like to look at it from the breakout. Gives us just a bit more room to have a look for opportunities. But obviously, there's some key levels in the way that you have to be aware of as well. So keep an eye on this one. This could be a good one to look for going into the day. That's also how you can trade head and shoulders patterns. They show you those breaks in trends and potentially changes in sentiment. So thanks for watching the stream today. If you enjoyed it, please leave a thumbs up, subscribe if you are new here. We've gone through quite a lot today. We've gone through dollar yen. Where's that heading to next? We've gone through the news, the big story, which was the Australian dollar employment data, which is boosting Australian dollar prices. And then we finished the day on the skill of the day, which was the market's head and shoulders pattern on gold. So that's the markets in free. My name is John, senior market analyst here at Anzo Capital, and I will speak to you in the next one tomorrow, same time.